Thank you for joining today's webinar. I'm Shivam, your host for this session on Arthur Financials General. The webinar is expected to last about an hour long and will be recorded. By the end of the week, you will receive a recording to all registered participants. I want to encourage active engagement during this webinar, so feel free to put your questions in the chat below. And towards the end of the webinar, I'll go through all the questions and answer any queries you might have. Um, and I think you should be able to find the chat box at the bottom of the Zoom link. So yeah, feel free to put your questions in there. Um, Towards the end of the webinar, you will also receive a post feedback survey. So we would really appreciate if you add in any feedback you have, and that's your chance to also add in any topics or could be financials or could be Arthur functionality that you might want to cover in the future, which we will look through and then decide what webinars we'll have next. In today's agenda, we'll essentially just go through the four key business setups for Arthur Financials, and look at how to set up the financial side of the system for each of those four setups, which are the property manager, letting agent setup, self-managing landlord setup, the rent-to-rent and head agent commission setup. We'll look at the relevant recurring charges for each of those four setups and also the different one-off charges you might have when operating each of those four setups on Arthur. And then towards the end, we'll look at custom transaction types, how you can add those on the system, and also we'll look through some custom frequencies. So I'm just going to switch my screen to Arthur. We're going to start with the property manager setup on Arthur. Um, so I have already preset a tenancy for the property manager setup, but I haven't added any of the financial recurrings and one-off charges, which we'll go through together. Just before we start, I'm sure most of you are already aware you can set up your financial recurrings either during tenancy creation. So when you've added a property on the system, when you've added a unit, um, and then when you're going in to add a tenancy from the top right-hand side of the screen, you go through these four sections for adding a tenancy in the system. In the third and the fourth section is where you set up your financial recurring charges here, as you can see. So this is your rent recurring charge related to the tenant. And then here's where you set up your one-off charges. So this will include your deposit and any, moving in fees or any one-off charges you have for the start of the tenancy. Here you have your property owner recurring charges, which as you know, is only relevant for people using Arthur as a property manager or letting agent. So this will include your management fees or your commissions. So that's how you would usually set up your financial recurring charges. In these examples, I have already preset the tenancies, um, but I haven't added those recurring charges just to show you that you can actually set up your recurring charges once you have already set up your tenancy on the system. So once you've created your tenancy from that section, and then you go into your tenancy and scroll down to your recurring charges here, you can go ahead and set up your recurring charges here as well after tenancy creation. So the first the first setup we'll focus on is the property manager and letting agent setup. So this will be relevant if you're using Arthur as a property manager or letting agent, where essentially what you're doing is you're collecting rent from the tenant. Um, you're deducting so you're collecting rent for the tenant on behalf of a landlord. You're deducting a management fee charge or a commission charge, which is usually a percentage deduction from the rent, which will go through all the different types of management fees you can add on the system. And then you're deducting any further one-off charges, any repairs and maintenance works that has been carried on in the property. So those are usually added as one-off charges on the system. and then you're paying the net amount to the landlord, which is the rent you've received, less the management fee, less the deductions, and then you pay across the net amount over to the landlord. So we'll look at how to add those financial reoccurrings on the system. Um, the first thing to understand with Arthur is the two different types of rents we have on the system, which are rent charge and direct rent. And the one you use is based on what your setup is. Um, it's because both the rents operate differently on the system. So the difference between the two is rent charge is a liability on Arthur. So if you click into recurring charges and then go to transaction type, here you can see the two different types of rents. So you've got direct rent and you've got rent charge. It's really important you understand the difference between the two. And based on your setup, will determine which one you're going to be using for your rents. For a property manager and letting agent setup, you would always use rent charge. The reason for that is, as I said, rent charge operates as a liability because you're essentially collecting rent on behalf of the landlord. Any rents you collect is now payable to the landlord, and so is a liability for your business. So it's important if you're setting up rents as a property manager where you're collecting the rents on behalf of the landlord, always set them up as a rent charge, not a direct rent. We'll look at direct rent in the next setup, which is using Arthur as a self-managing landlord. Direct rent is essentially just a revenue and income. So with direct rent, you're collecting the rent, you keep the rent and recognize that as your revenue and income, which we'll look at in the next setup. So adding a recurring charge as a property manager, you would first click into recurring charges here, click into add recurring charge, and then here you've got your tenancy drop down. So this will show a list of all your different tenants. If you have multiple tenants, they'll all appear down here in this drop down. The to be invoice on date is the invoice date, the date you want the system to generate the rental invoice. So if you click into that, um, let's say this tenancy started on the 1st of August. So you can select 1st of August as your invoice date. So you can backdate your recurring charges. This is your frequency. So these are most of these are the system default frequencies you have available. Towards the end, we'll look at setting up a custom frequency. That's where you have maybe tenants that pay on specific days or a specific frequency that you don't currently have on the system. We can go in and set up a custom frequency for that. So in this case, we'll just go monthly. Um, so that's your invoice date, the date you want the invoice to be generated. This is your period, the period the rent is related to. So in this case, the invoice date is the 1st of August, and we're charging rent in advance for the month of August. So the rent is charged on the 1st of August for the month of August, which is your period dates here. The start of your period is defaulted to your due date. Um, so on your statement, your due date is defaulted to the start of the period date. So once this date has been passed, that's when the system will mark this invoice as overdue. Um, However, if you do have tenants that you know usually pay late, and you don't want this charge to be overdue after the 1st of August, you can then use the expected payment date to control the overdue date. Um, so for example, if you know the specific tenant usually pays 7 days late, and you don't want the invoice to be marked as overdue, then you can change the expected payment date to, let's say, 8th of August, meaning this invoice will not be out overdue until the 8th of August. So that's your transaction type. As we said, for a property manager setup, make sure you always use rent charge as your transaction type. This is your transaction description, which populates the first part of your description that appears on the statement. Here you have many templates for different descriptions. So you can go through this list and see how you want your description to appear on the invoice. And then finally, this is just your amount, um, £600 rent. And here you can add VAT as well. So if you're charging VAT on the invoices, you can add your VAT in here. In most cases, this will be not applicable. And then save recurring charge. I can see a few questions coming through, but I will go through them at the end of the session. I'll go through all the questions together. Um, so once the recurring charge is set up here, you can now see for the property manager, as I said, it should always be rent charge. Here's just a summary of what we've just set up. That's the frequency, amount, start date. So when the recurring charge started, which was the first invoice date, which was the 1st of August. The next collection date tells you the next date the system will generate the next charge. So because as we can see, if we now go into the statement, we can see the charges have been generated for 1st of August and 1st of September. So the next collection date is the 1st of October, which is when Arthur will now automatically generate the next invoice for you. So on the 1st of on the 1st of October, the next rent charge will appear on the statement here. Um, just a feature that is quite useful. Is if you want to generate the charges early. So for example, as I said, the next charge will be generated on the 1st of October by Arthur. But let's say you know a tenant that pays in advance, maybe a few days earlier usually. Arthur won't generate this charge until the 1st of October, so you won't be able to process the receipt until then. So if the tenant pays a couple of days early before 1st of October. If you want to generate the charge early, you can use the days in advance feature here in the drop down. So from the drop down, edit days in advance. And then here you can add days in advance, which will generate the charge those many days before the next collection date. Um, so that's how you can use the days in advance feature. So it will generate the charge 5 days before the 1st of October. So the charge will appear on your statement, which will now be available for you to either reconcile or process a receipt against if someone pays early. So that's how you use the days in advance feature. Um, so that's the main recurring charge you would usually use for the property manager setup. Um, the second recurring charge you would have is a management fee. As I said, as a property manager, you're collecting the rent, you're deducting a management fee, and then you're paying the net amount across to the landlord. So the management fee can be added in each of the three different levels in Arthur, depending on where you want that management fee to apply. So you can either add the management fee in the property level. So if you go into the property and then go into recurring charges in the property level. So we can add that management fee level here in the property level. Adding it in the property level is useful if you want if you want a single management fee to apply across all the units and all the tenancies. So for example, in this property, we have 4 units. So you would have 4 tenancies in this property. Um, if you're paying the landlord a single amount for for all 4 units, meaning you're collecting the rent for from the 4 tenancies in the 4 units of this property, but then you're paying the landlord a single amount for all the rents you've collected for all the 4 tenancies, then it would be useful to set up the management fee in the property level because what this will do is it will apply a single management fee across all the rents you've collected. So let's say you have £500 collected from each of the 4 units in from the 4 tenancies. If we add the management fee in the property level here, so discharge is for the property owner. In most cases, it's percentage based on rent received, and you add your management fee in the property level here. And let's say it's just 10%. What Arthur will do is it will apply a single management fee for the 4 lots of £500 you've collected. So there'll be a single line on the statement that goes out to the landlord saying um, this it will apply that single management fee against all 4 rents that you've collected. So that's useful if you're paying the landlord per property rather than paying the landlord per individual unit or tenancy. This remittance box means that the management fee will apply when you're going to process the landlord payment. So we'll go through the remittance process after, but as you know, once you've collected the rent, you then go into the financial dashboard here, and then you go into payable to owner or property owner remittance, which is where you then process the landlord payments. So ticking that box here applies the management fee at that stage when you're going to process the property owner remittance, not when the rent has been received. It will only apply the management fee as a percentage based on rent received when you're going to pay the landlord at the remittance stage. So that would be useful if you're, so I would recommend always ticking this box if you are going to apply a single management fee across all the tenancies and all the units in the property. The second place you can add the management fee is in the unit level. So this is quite useful because once you add the management fees in the unit level, you don't have to keep adding a management fee reoccurring every time you set up a new tenancy. As you know, tenancies come and go. So when you close a tenancy, the reoccurring charges usually automatically get disabled by the system. So the benefit of adding the reoccurring charge in the unit level is that, as your tenancies are getting closed and new ones are getting added, you don't have to keep setting up a management fee every time you set up a tenancy. So this is the advantage of adding the management fee at the unit level. This will only apply the management fee for that individual tenancy related to that unit. So in this case, we've got 4 units in this property. So we would set up a single management fee recurring in each of the units, and then you'll have 4 lines of management fee in the statement applied to each individual rent that you've collected. And then the final example is adding the management fee at the tenancy level. So this is where we've added the recurring charge, the rent recurring charge. You can choose just to go in and add the management fee in the tenancy level itself. So we'll add it in here for now. So in the tenancy level, go to add recurring charge, and here this is a charge for the property owner because you're charging the landlord for the management fee. And these are the different types of management fees you can apply. So you can either apply a management fee as a fixed amount. Applying a management fee as a fixed amount, you have to add the date you want that management fee to be applied and the frequency you want to charge the landlord for that management fee. The most common ones are percentage based on rent charged and percentage based on rent received. Um, the difference between the two is percentage based on rent received will only apply the management fee once you've received the rent. Um, so you've got your rent charges being raised here on your statement. So the management fee will only be applied when you pay off these rents as a percentage based on the rent received. So when you go in the drop down and pay off the charge, that's when the system will apply the management fee. So that's the percentage based on rent received option. Percentage based on rent charged is going to apply the management fee and charge the landlord when the rent has been generated by Arthur. So in that case, whenever a rent charge is generated, in this case, the next one's generated on the 1st of October, that's when the system will create a charge for the landlord as a percentage of this rent charge amount. In most cases, I think the most common one is percentage based on rent received because usually landlords only like to be charged once the rent has been received by the tenant. So we'll go for that option. And here we've set up the management fee. So here we've got percentage based on rent received. So management fee will be applied when the tenant has paid. And yeah, transaction type here is management fee, or you can use letting commission charge. So it's either of those two options. They work the same way, and that's the 10% fee that's going to be applied and save recurring charge. So in terms of the property manager setup, um, there would be two recurring charges you're adding on Arthur. One would be the rent charge, and like I said, always use rent charge, not direct rent for a property manager setup. And then the second one would be the management fee, but then you now have an option of where you want to apply that management fee. You can either apply it at the property level, the unit level, or the tenancy level, which is usually based on how you want to charge that management fee. So yeah, just bear in mind how you make the payments. If you are making the payments to the property owner for the entire property as a single payment, then it's worth adding the management fees at the property level. If you're making individual payments per tenancy to the property owner, then you would either apply the management fee at the unit level or at the tenancy level. So on the statement here now, we've got the rent charge. Um, the process now is to pay off these rent charges. So either you can pay these off directly in Arthur from the drop-down payoff. You can either, if you are using the Zero integration, um, you would be processing your payments through Zero. So you wouldn't be paying off charges manually in Arthur. Instead, you would be reconciling your bank in Zero, which will then create the payments in Arthur for you. If you're using the Arthur bank feed, you would be reconciling the payments in your Arthur bank feed, in your live Arthur bank feed, and that will create the payments for you. In these examples, I will just pay them off manually in Arthur itself. So from the drop-down payoff charge, this is the date the payment was received. So 1st of August charge, the bank the payment came into, and the amount that was received. You can change the amount in here if there was an underpayment, but if the full payment was made, then just add the same amount as the charge and add payment. So once you've paid off the rent charge, meaning the tenant has made the £600 payment for this rent, um, Arthur will automatically create this receipt for you on the tenant rent statement to show the tenant has paid that rent. But at the same time, Arthur will also automatically create a receipt on the property owner statement because as a property manager, you've collected the rent on behalf of the landlord. So this tenancy receipt is now showing as that £600 is now payable to the landlord. And because we set up a management fee as well in the recurring charge as a percentage based on rent received, um, Arthur has also automatically generated a management fee of £60, 10% of 600, charging the landlord. So here you can now see we've got £600 rent received. This is on the PO statement, less the £60 management fee. So the payable to the landlord is £540. Um, Before we go ahead and process this payment to the landlord, um, usually you could also have further one-off deductions and one-off charges. This could be things like repairs or any maintenance work where you would charge the landlord for that repairs and maintenance work by deducting it from the rent that you've collected. And then once you've charged the landlord, you can then pay the supplier or the contractor for that work that needs to be done on the property. So this is now where you would add a one-off charge on the system, because these obviously happen as the work needs to be done. So they're not added in as recurring charges. They would be added as one-off charges. Any one-off charges in Arthur are added directly in the statements. So either you can add a one-off charge in any of the statements, the rent statement, the PO statement, or the contractor statement. So adding a one-off charge in the PO statement, you would just click on PO statement and then click on add transaction. The default one-off charge we have is a disbursement charge recharge. That's the reason it's a disbursement charge recharge is because you are charging the landlord. Um, sorry, it's a charge raised for the contractor and then you're recharging the landlord for that work. So we're raising a charge for the landlord. So we're charging the landlord £50 for the repair. And then if you tick this box, Arthur will now allow you to add the contractor charge as well, where you can assign a contractor to that work. So here you've got a disbursement charge recharge where we're charging the landlord £50 for the repairs. And then at the same time, we're now creating a £50 bill to pay the contractor for that work done. So this is quite a useful feature. It allows you to add both those transactions at the same time, where you charge the landlord for the work as a deduction from the rent, where you collect the rent, the £50 from the £600 rent you've received, and then you raise a charge for the contractor where now you need to pass that money over to the contractor. So that's going to be a spent item in your bank account. So it's quite useful to use this. If you do have any markups, you can show that with the difference in amounts. So you could charge the landlord £50 and you can pay the contractor £30. So that way you've had a £20 markup, which will appear in your transferable income as a profit. In this case, we'll just pay the same amount and click on Save Transaction. So here we can now see we've got the rent received, £600, management fee of 60 and £50 repairs, which makes the net amount 490, which is the amount owing the landlord. So from this stage, if you're happy with all these transactions, you can now go and process a payment of £490 to the landlord, and then process a statement and send the statement across to the landlord for that remittance. I won't go into that process in detail, but in terms of processing that payment of 490, you would go into the financial screen here, go into payable to owner, and then in here you can see all the payments that you owe all the different landlords. As a property manager, you're managing properties for multiple landlords. So here you can see all the different landlords and all the amounts you need to pay those landlords. So in this case, you can see that's the 490. If you click on remit, this is where you process the landlord remittance of 490. And once you process this remittance from here, you can then run a property owner remittance statement. So you can send a PDF statement to the landlord showing them they've received 600 from the tenant, and then these are deductions from the 600, and this is why they received 490 from the property manager. I'll quickly now move on to the next setup, which is the self-managing landlord setup. So with the self-managing landlord setup, we have our recurring charges here. So with the setup, it's quite straightforward. You would just be adding a single recurring charge related to the tenant, which, as we previously said, this should be a direct rent. So in this setup, you're using Arthur as a landlord, and you're a self-managing landlord. Any rents you're collecting in your bank account is your revenue and income, and direct rent in Arthur is recognized as a revenue and income. It's it's money. That is your income. You're not passing it over to any third parties. So always use direct rent if you're using Arthur as a landlord. So we've gone through what these dates mean. So we'll just quickly add the charge in. So here we've got the invoice date, let's say 1st of September, due date 1st of September, and the description here, rent, and save reoccurring. So the main thing is if you're using Arthur as a self-managing landlord, make sure you're setting up your transaction rent type as a direct rent. So as a self-managing landlord, usually you would just have the single recurring charge, which will be your direct rent. Obviously, you're not adding any management fees, reoccurrings, or any letting commissions because you are the landlords yourselves using Arthur. Um, yeah. So once you add the reoccurring charge, you can see that rent reflects on the tenant rent statement here. Um, and the process from here will be the same. Once the rent has been received from the tenant, if you're using the zero integration, you would reconcile this rent invoice in zero in your bank, and that would generate your receipt. If you're using the Arthur bank feed, you would reconcile this invoice in your Arthur bank feed, which you'll find in the financial screen there in bank accounts, and that will create the receipt. If you're just using Arthur on its own, then you can just manually pay off the charge from here, pay off, and that will generate your receipt on the statement. So you can see the difference here is when you pay off a rent charge, unlike the rent, oh sorry, when you pay off a direct rent, unlike the rent charge, paying off a direct rent only creates a single receipt on the tenant rent statement. It's not going to create a receipt payable to the landlord on the property owner statement, which is why it's really important to use the right transaction type because that's how these charges are created to operate. Rent charges, paying off a rent charge will always create two receipts, one on the rent statement and one on the PO statement, because that rent is now payable to the landlord. Paying off a direct rent will only create a single receipt on the rent statement because that rent that's been received is your income and revenue. You're not passing it over to a third party or anyone else. Um, so in terms of the one-off charges for landlords, just gonna uh so in terms of the one-off charges for landlords, um you can add one-off charges against tenants as well. So for example, you could charge the tenants for utilities, for keys. So those are the type of one-off charges you'll add against a tenant for cleaning and things like that. For that, as I said, any one-off charges are added directly in the statement from add transaction. And then here for one-off charges, you can use sundry charge. That's the system default. If you do want to set up custom transaction types, like would have one for cleaning, one for um, keys, utilities, different things. If you don't want to use this generic transaction type, we'll go through how to set those up towards the end. So in this case, let's just use this one. So that's how you add a one-off charge on the system, and that appears on the rent statement. Outstanding balance gets updated, and then you can pay off the charge the same way as you pay off the rent to show that's been received. So that's how you add one-off charges against the tenants. For for landlords, you would usually raise contractor charges as well. That these are your expenses. So as a landlord, you're managing the property yourself. You're responsible for the repairs, all the maintenance work. So you need to raise the bills for any contractors, any suppliers that carry out the work on the properties. So to do that, you'd go to the contractor statement and add transaction. You could still use disbursement charge, recharge like we did previously. for the property manager setup. But as you are the landlords yourselves, you don't need to add both sides of the charge and the recharge. You just need to add the one side, which is the contractor side, because all you're doing is this is just recognized as an expense for your business. So you're just raising the expense directly. You don't have to recharge the landlord because you're the landlord yourself. So in this case, when you're adding this transaction, you can see you're not ticking that box anymore. Um, you're not recharging yourself. So all you're doing in this case is you're changing the paid by to contractor. You have your list of contractors here, and then here you can add the charge against the contractor directly. So you can use that same transaction type if you want, or you can set up custom transaction types, like I said, for the different types of expenses you have, like cleaning, repairs, maintenance, etc. Um, so yeah, the main thing is for the landlord setup, you're not ticking that add additional contractor box there. You're adding a single charge against the contractor directly, and you save transaction. That appears on your contractor statement. Um, and this is now a bill, as you know, this is an expense, so you're going to transfer the £70 across to the supplier and the contractor. So this creates a bill. Any charges raised against tenants are invoices because tenants are considered as customers, as you're receiving money from the tenants in the form of rent or any one-off charges. Um, with one-off charges as well, you can um, look at the different levels, which, as you know, are the three levels: the property, the unit, and the tenancy level. So with the one-off charges, you can decide to add the one-off charges in the different levels, based on what type of charge it is. So you can add a one-off charge in the property level, in the unit level, or in the tenancy level. So adding a one-off charge in the unit level, so this is a single unit property, so we don't have a property level. But if we take another property, that's a multi-unit property. Um, so for example, if we look for a multi-unit property, like I think this one was multi-unit. So for example, this property had 4 units. Um, as a landlord, you can add those one-off charges in the property level if it was a charge related to the entire property, an expense related to the entire property. Then you can go to the property level, go to statements, go to the contractor statement, and add transaction here. So this will apply the charge to the entire property. So it will reflect the charge in all the 4 units and all the 4 tenancies within that property. So if you're doing, cleaning for the entire property, then you would usually add that charge here at the property level, um, against the contractor because it's related to the entire property. So same way, you go in, add the charge, save transaction. You can add the charges at the individual unit level as well, any one-off charges at the unit level. So you go into the specific unit. So go into the unit level, same thing, go to statements, contractor statement, and add the charge here at the unit level. And that expense will be assigned to that individual unit. The benefit of doing this at the correct level is you can then run reports in the future. For example, if you want to look at all the expenses, if you want to look at the performance of different properties and units in your portfolio as a self-managing landlord, if you're adding these charges in the relevant levels, you can run a P&L report in Arthur in against the for the different properties and also for the different individual units, and then that way you can track your performance in terms of rents being your income and expenses being your sorry, and the contractor charges being your expenses. So that's the benefit of adding it in the correct level. Your reports will be more accurate for for to track the performance of different properties and which you can refine to individual units as well. So that's the self-managing landlord setup. The third setup is the rent-to-rent setup. In terms of the rent-to-rent setup, um, here you're kind of just subletting the property. So you are not the actual landlord, but in the rent-to-rent setup, the rent you're charging the tenants is an income, and then you have a contract with the actual landlord where you have to pay the landlord a fixed amount every month, regardless of whether the property is occupied or what or the rent that you're collecting or the amount of rent you're collecting. So you have a guaranteed rent that you need to pay the landlord, which is your expense. Any rents you're collecting is recognized as your income. Um, so in this setup, for that reason, we will use direct rent, not rent charge. Even though you are kind of collecting the rent and then paying the landlord, in this case, because with the rent to rent setup, any rents you collect is recognized as your income, and then you have a guaranteed expense you need to pay the landlord regardless of how much rent is collected. That will be that will be your expense, the guaranteed payments to the different landlords. So with the rent to rent setup, your rent recurring charge will be a direct rent as well, similar to the self-managing landlord setup. So I'll just quickly set that up. So use direct rent for rent to rent setup. Um, so look, the tenancy side will look similar to the self-managing landlord setup in the sense that you're using direct rent. That £1,000 you're collecting um, is is your income and is recognized as your revenue. Um, you now also have to pay the landlord every month as a guaranteed rent. So for that, we need to set up a second recurring charge in the rent to rent setup as a fixed amount that needs to be paid to the landlord, which will then be your expense. That recurring charge again can be set up in in the in three levels. So it could either be set up in the property level, the unit level, and the tenancy level. Again, now that depends on how you're paying the landlord. If you have a multi-unit property where you have 4 units, you're collecting 4 rents from 4 tenancies, but then you're paying the landlord a single amount every month for all the 4 units, then you would set up that guaranteed rent recurring charge at the property level because you're paying the landlord a single amount for the entire property. If you are paying the landlord as, for each individual unit, then you can set up the guaranteed rents either in the unit level or in the tenancy level. So it's all based on how you're paying the landlords. Um, in this case, let's set we as this is a single unit property, we can set up the guaranteed rents in the unit level. So you'd go into the unit level, go into recurring charges and add recurring charge. This is a charge for the property owner. In in the rent to rent setup, it's usually a fixed amount you've agreed with the landlord on how much you're paying them. And this is the invoice date, the dates you're paying the landlord. So we're going to start paying them on the 1st of September. And again, this is the period that payment is related to. So we're paying them on the 1st of September for the month of September. For the transaction type, we don't have a default transaction type for rent-to-rent landlord payment. So if you are using Arthur for the rent-to-rent setup, you would need to set up a custom transaction type for this payment you're making to the landlord. So the way you do that is go into your financials dashboard here and then go to analysis codes. This is where you can set up those custom transaction types. And then here you've got all your different custom transaction types. Um, so with the rent to rent payment, the way you would set this up is, so this is just a description, rent to rent payment. The type will be a receipt. and this will be credit because it's sort of in Arthur, it's amount payable to the landlord. When you're raising a custom transaction type for amount that's payable to the landlord, the type will always be receipt and credit. Um, on the statement, it will then show as you owe that money to the landlord, which you can then go and remit to the landlord. So receipt and credit. Default, VAT, not applicable. This is who the charge is related to. Rent-to-rent payment is a payment to the landlord, so we're creating this charge against the landlord, and we want to create this charge on the property owner statement. The opposite type is the charge that will, the receipt that will be generated once that charge has been paid. In this case, this is already a receipt, so we don't need to add in an opposite type in here. I'll go through another example of a charge where we'll add an opposite type. So because this is already a receipt and the opposite type is usually the receipt that's generated once the charge has been paid, we're not adding an opposite type for this. And account type, it's an expense for the rent-to-rent setup. The landlord payments are expenses. And default payment type, it's usually bank transfer. If you are integrated to Zero, this is really important. Make sure you tick this box because when this payment is created, you want this to sync to Zero as a bill. On your bank account, you're going to be transferring money to the landlords for these guaranteed rent payments to the landlords. And for example, you've paid the landlord £800 for property A. You want this receipt credit to sync to Zero as a bill, so you can then reconcile that £800 bill that you've generated in Arthur against the payments you've made to the landlord. So it's really important you tick this box if you are integrated to Zero and you're creating this specific transaction type. Allow associated recurring deductions. If you are having any deductions against these receipts, it's possible where you pay the landlord £800 a month, but if you have any repairs against the property, you deduct the money from that £800. So you can add a disbursement charge to deduct against this specific guaranteed rent payment. So you could tick that box, and yeah, you don't need to tick these two boxes here. That's if you're using the bank feed. So go ahead and save analysis code. Once you've saved analysis code, we can go back into the screen here where we can set up that guaranteed rent payment from add recurring charge. It's a fixed amount paid to the landlord, um, date of the bill, period related to that specific charge. And then here you can see the setup. This is the code we've just set up, which will now appear in the drop-down list for you to pay the landlord. You can call this landlord payment. So the rent, the direct rent we set up was 1,000. So the landlord payment, let's say, is 700. So in that way, you're making a £300 profit. You're collecting £1,000 from the tenant, and then you're paying the landlord this guaranteed fixed amount of 700 every month. Save that, and then we can see that's the second recurring charge you set up for guaranteed rent. And then you go into the property owner statement, and here you can see in the unit level, every month Arthur will now generate the £700 payable to the landlord as a guaranteed rent payment. So that's the setup for guaranteed rent payments. You would have two recurring charges. One would be in the tenancy for the rent you're collecting, which will be a direct rent. And the second one would be a guaranteed rent landlord payment recurring, which you can set up either in the property unit and tenancy level, depending on on how you're paying the landlord. So in this case, we've set it up in the unit level and in recurring charges. So like I said, the benefit of setting this in the unit level is that the tenancy will come and go. You'll create new tenancies, you'll close tenancies, and when you do that, recurring charges get disabled. With guaranteed rent payments, I know you have to pay the landlords even though sometimes you may not have a tenancy in there. So it's quite useful setting up in the unit level because then it's always active. Um, it doesn't disable um, like it would do in the tenancy when you close a tenancy. So that's a rent-to-rent setup. Um, we'll now look at custom transaction types. We did briefly look at the custom transaction types um, for the rent-to-rent. We'll now look at an example of a charge. So So one of the one-off charges we looked at was the disbursement charge recharge. You can use this either using Arthur as a property manager, or if you're using Arthur as a self-managing landlord, we said you can still use the disbursement charge recharge. The difference is that if you're using it as a property manager, you would usually tick that box. So I'll just show you again. So if you're using Arthur as a property manager, you would tick that box, allows you to recharge the landlord and create the charge for the contractor, recharge the landlord as a deduction from the rent, and then pay that money across to the contractor. If you're using it as a self-managing landlord, you can still use disbursement charge recharge, but now you would just create a single line, which will be just the contractor side, because as a landlord, those are just all your expenses, and then you'd create the contractor side. So that's the generic code you can use for expenses and for recharges. If you do want to set up custom codes, you can do that as well from the financial screen, analysis codes. So if you don't want to use a generic code and you want further analysis, we can set up custom codes. You can have a different type of transaction type per expense. So that way you can track all your expense streams. And you can also do this for rental income. If you have many different revenue streams like residential rent, commercial rent, um, you can set up ground rent as well. You can set up different custom transaction types so you can then be able to in your reports track the different revenue streams and also the different expense streams. So for the expenses, this is the way you would set up a charge. So let's say we want to set up a custom code for cleaning. You go to any charges set up on the system will be a charge debit. Default is not applicable. So here is where you select who you want that charge related to. So something like cleaning, you can either set it up for the tenant, where you're charging the tenant for cleaning. You can even charge the property owner for cleaning, and if you control and click, it allows you to select um, multiple contacts, where you can now create this specific charge against the property owner on the property owner statement, but you can also create this charge against a contractor on the contractor statement. So if you wanted to use cleaning instead of disbursement charge recharge, this is how you would set it up. You would select both property owner contractor statement, allowing you to add both sides of the charge and the recharge. If you're using it as a self-managing landlord, you would just use it, um, just do the contractor side because you're not creating the recharges against the property owner. And you can also set this up against the tenant in that way. So the opposite type, as we said, is the receipt that's generated once the charge is paid. Um, so when you've set up a cleaning charge, you've created a cleaning charge and you pay off the charge, what receipt do you want to appear on the statement is the opposite type. So if it's a tenancy charge, if it's, for example, a tenancy charge like that, you would want some sort of tenancy receipt. So you would go for tenancy receipt here because on the statement it will say tenancy receipt when you pay off that charge. For property owner, as you know, the property owner charge is a deduction against the rent. So that will be part of the property owner remittance. So you would select property owner remittance there. And if it's a contracted charge, something like that, you can either do contractor remittance, um, or, disbursement charge payment or something. You can also create a custom receipt type, which will appear in this list. So if you want something called cleaning receipt in the opposite type, you can set up a custom receipt, and then that will appear down here as the opposite type. So yeah, you just need to remember if it's a tenant charge, use tenancy receipt. If it's a PO, if it's related to the property owner, which will usually be a deduction against the rent, then use property owner remittance. And if it's a contractor charge, you can use contractor remittance as the opposite type. Those are system defaults. And then this is the type of charge it is. It's an expense. And here, you don't need to tick these boxes for any charges. Save analysis codes. If you've got loads of charges, if you've got loads of custom transaction types, and it's making your list quite long when you're adding transactions, if you select hide from selection, it will disappear from that drop down when you add a transaction. So that way you can hide certain transaction types from that drop down. Um, so I'll have a look at some of the questions that have come through. So I've got a few questions coming through. So um, so first question is when you're setting up the deposit charge, can you split this into a holding deposit and then the remaining 4 weeks security deposit, which makes 5 weeks in total? You can do that. Um, if you want to split the deposit into two, one part being the holding deposit and one part being the um, remaining 4 weeks. In the deposit statement, you can add two charges instead of one. So when you're adding the deposits, as you know, you add your deposits as a registered deposit charge. Instead of adding the full deposit amount, which is the full 5 weeks, you can add 1 week holding deposit. And in the description, you can put holding deposit. Let's just say holding deposit is £100. So you can do that. And then let's say the remainder of the deposit for the 4 weeks is £450. So you can split deposits this way, um, by adding two separate invoices, two separate charges. Or if you want, you can just add one single one for 550, which is a full deposit, but then you can pay it off you can pay it off twice. So if you have 550, which is a full deposit, you can pay off the charge and you can first pay off the holding deposit amount when you receive it. That will create a single receipt of 100 on the deposit statement, like that. And then you can see 350s left. And then when you receive the remaining deposit, you can pay off the remaining 350. So you can do it either way. Next question is, I manually went in and paid off a management fee charge, which was raised against rental payment. Am I correct in thinking this was wrong to do? I say this because I come to remit end month. The management fee is not being deducted. I assume the system thinks the landlord has already paid and therefore, yeah, that's correct. So I think what you're saying is you're you're paying off management fees, which you shouldn't do. Um, so I'm assuming you're a property manager or letting agent, and you're collecting rents on behalf of the landlords, and you're charging a management fee. That's the first setup we went through. You wouldn't pay off management fees in Arthur because management fees are usually deductions from the rent. um, you're not receiving £60. The landlord is not paying you £60 into your bank directly. In most cases, the way you collect the management fee is by deducting it from the rent you've collected from the tenant. So with management fees or any charges on the property owner statement, you wouldn't go in and pay them off. Instead, you would process them as part of the remittance. So you have a you have the rent you've collected, you've raised your management fee, and you've raised your disbursement charge. The next step is then to go and process a remittance of 490. So you're paying the landlord 490, which means you're retaining these two amounts in your bank account. So that's how you're collecting them. You're not getting these payments directly paid into your bank from the landlord. So the way to process management fees and one-off charges you've raised against the landlord is to go into financials, and then in the financial dashboard, go into payable to owner and create a remittance of that 490. Um, that's how you that's how you pay off management fees, not by manually going in and paying them off. So that's the reason they're not appearing on your property and remittance, because obviously when you pay this off, the outstanding balance will go to zero, and then it wouldn't be here anymore because the remittance screen only shows outstanding PO charges. Um, so yeah, it's best not to pay them off. Once they've been raised, just come directly into the PO remittance screen and create the remittance to collect the management fee. So next question is, will the owner be able to see the markup? Um, no, the owner will not see the markup. The owner will only see the one side of the disbursement charge, which is the £50. So if you're adding a markup, and you're ticking that box, and then you're charging the landlord 100, or you're paying the contractor 50, the owner will only see the 100. So they'll only see this side of the what they're being charged. They won't see the contractor side. The contractor side will reflect on the contractor statement. So when you're sending the statement out to the landlord, the owner will only see the £100 charge. Contractor side will be in a separate statement in the contractor statement. Mag, and then we have another question here. Management fees on property unit level only works as a recurring charge when the box is ticked. That's correct. That's a good point. The management, when you're setting up a management fee at the property level or the unit level, you you have to tick that at remittance box here. Otherwise, it's not going to apply the charge. Um, so when you're setting management fees at the higher levels, at the property and unit level, you would have to tick that box. You're asking if that could change. Um, so right now, the system won't be able to apply it if it's unticked. Um, I will look into that, um, if it's possible, or what the implications are if the management fees can be applied if you untick it. Because if you untick it, it will mean it will generate the management fee when the rents have been received at the property level or at the unit level, um, not when you're going to process, not at the point of remittance when you're going to pay the landlord. So we'll look into the implications and see if that's something we can add. But at the moment, if you're adding management fees at the property or the unit level, make sure you are ticking this box, which means it will only be applied when you go and remit the transaction here, the remit the landlords from here. Um, I was adding utilities under properties, recurring charges, and sundry charges, while the rent is added under tenancy charges. Am I correct in doing this? Yeah, that's fine. You can add utilities under properties, recurrings, and sundry charges. Yeah, that's fine. You can you can add the different recurrings at the different levels depending on who they are related to. So if you are adding obviously all your rents will always be added at your tenancy level because those are rents are related to the tenancies. But if you are adding utilities at the unit or property level, that would be fine as well. That would be okay. Just bear in mind who they're related to, and how you're paying the landlord. If, for example, if you are paying the landlord per individual tenancy and unit, you can't add any charges at the property level. So for example, you have a property and you have 4 units in there, but you're paying the landlord, you're paying that landlord 4 payments individually for each unit. In that case, you should add all the charges either at the unit or the tenancy level because they need to be included in the payable to owner in the remittance here. So in this, for example, here you've got unit one, unit two, you're paying the landlord 2 payments. You can't add the the charges at the property level because you're paying the landlord per individual unit. It's not going to reflect the charges in here if you do that. So it all depends on how you're paying the landlords. Um, you can only add charges at the property level if you are paying the landlords for the entire property. So for example, you've got this property here. This property has multiple units. So here in this case, you can add charges at all levels and they'll all reflect here because you're making one payment to the landlord. Or if you're paying the landlord per entity, which means you're paying the landlord one amount. Let's say you have a landlord who has multiple properties. In this case, you can also add the different levels at property unit or tenancy level because you're going to pay the landlord anyways one amount for all the charges related to that property. So yeah, just it's if you're paying the landlord per individual unit, then you can only add the charges at the unit or the tenancy level, not at the property level. If you're paying the landlord for by property or by entity, then you can add charges at any level and you will be able to include them in your remittances. If your question was these charges are related, if you're using Arthur as a landlord, then it doesn't matter. You can add the contractor charges at any level or the tenant charges at any level. Just a few more questions. Um, so we are tenants and I have added the tenancy contract, but I am a bit confused about how to correctly add my rent. Should it be under tenancies, recurrings, or elsewhere? Yeah, all your rents need to be under tenancies. So if you've added the tenancy on the system, go to the tenancy and then go to recurring charges, and your rents will be added in the tenancy level, always. Um, so if you've already created the tenancy, you can go into the tenancy and add the tenancy recurring here. If you haven't created the tenancy and you're adding the tenancy on the system, you can do that as part of the tenancy creation by adding your rent in here in the recurring charge. So both will create the recurring charges for you for the rents. Um, when I have the next question is when I have remitted, I cannot see the disbursement charge in the transfer amount that we are due to transfer to ourselves. How does that work? We usually transfer these amounts to our current account, then they make the contractor payments from. So the transferable income screen only shows income. So it the tran this so this transferable income screen is only relevant for income. Income will be things like direct rents, management fees. Disbursement charge recharge will only show if there's a markup. So we went through adding a markup where you charge the landlord 100, but you pay the contractor 50. In that case, a £50 markup will show up in the transferable income screen. It doesn't show disbursement charges you're raising to pay contractors. So Um, if you are if you are charging the landlord for the repairs by adding the disbursement charge, but then you're not paying the contractors from your client account, you're transferring that money to the current account and then paying the contractors from your current account, you can't track that from the transferable income screen. In that case, I think it's better if you run a report because the transferable income screen only shows income. So if you want to see what amounts you've charged the landlords, so you know how much needs to be transferred to your current account, so you can pay contractors from there. You can run this report here. It's called go to financials, go to agency fee report. You can run it as an enhanced by um, charge, group by charge. And then this report will show you, it's just backdated. This, and then you only really want to see the remitted records. So filter only remitted because those are the disbursements included in remittances that you've processed. So then here you can see all the disbursement charges that you've raised as deductions against landlords that now need to be transferred to your current account so you can then go and pay your contractors from there. Um, that's only if you're paying your contractors from your current account. So money needs to be transferred from your client to your current account. If you are paying contractors from your client account, then you don't need to do this process. You would pay them from your client account anyways. How do we add letting fee charges if you're receiving rent direct as a landlord? So I'm not sure I understand that question. What sort of letting fee charges would you add if you are the landlord yourself? Is that a letting fee charge for the tenant that you're charging the tenant? Um, as you are the landlord yourself, usually letting fee charges are only used if you are a property manager. Next question. Does selecting rent charge or direct rent change the functionality? Yes, it does. It's really important to use the correct one because it does change the functionality they are two different charges and they have been developed to operate in different ways. So it's really important to using the correct one for your setup. So to summarize, if you're a property manager, letting agent, where you're collecting rent on behalf of the landlord, and then that rent needs to be passed over to the landlord, always use rent charge. If you are a landlord uh, or using rent to rent scheme, then use direct rent, where the rent collected is your income and you're not passing it on to anyone else. Arthur should be showing a clear breakdown of how much each property is costing us. How can I generate a report? So, do you mean are you if you're a landlord, um, if you want to generate a report of your income per property, your profits per property, you can use reports there. Go to financials and we have this report here, self-managed income and expenditure report. So with this report will show you all the rents that are received per property and per unit, as we can see here, and all the expenses per property and per unit as well, and then the balance, which will be a profit or loss. So you can use this report to track performance of properties and units. Um, yeah. Um, and then the next question, how do we add rent charges for existing tenancies? So for example, tenancy started in 2021, but I've just started to use Arthur. Would we just invoice for the most current period? Um, you can backdate recurring charges. So when you're adding the tenancy, so for example, we go into tenancy and go to recurring charges. When you're adding the recurring charge, you can backdate it to 2021, and then that will generate all the rents from 2021 going forwards until now. Um, and then you would obviously go through the process of paying them off, but I would probably say that it's best to start from now going forwards and then add in an opening balance. Um, so if so, for example, if you've just started using Arthur, you decide on a conversion date. That's the date you want Arthur to start your recurring charge, all your recurring charges to start. So let's say you choose 1st of October as your conversion date. You would start all your recurrings from the 1st of October going forwards. And then what you can do is to reflect any historic balances, you can just add in an opening balance for each tenancy. So that way you can still get a full picture of any arrears, historic arrears or credits for that tenant. Um, so that would be the best way rather than starting this tenancy in 2021. You would then obviously have to pay off all your rents for all your tenancies from that day going forwards. So it's better to start your recurring charge from your conversion date. And then once you set up your recurring charge from your conversion date, go into your statement and just add like a one-off opening balance as of that conversion date. So let's say you choose October as your conversion date. If it's arrears, just put an arrears balance. If the tenant has historic credits, just put a negative in there as a rent charge or direct rent, whatever your setup is. And that will reflect in the description, you can just put opening balance. So that will then reflect any historic balances on the tenancy. Um, and then the next question, letting agent pays as direct rent, but they apply their fee to the payment. So for example, 1,000, but the agent pays 800 for first month. So need the markup of 200 as expense. Um, I'm not 100% sure. Do you wanna come into our live chat? Sorry, not live chat. Do you wanna come into our take our get help system? You can raise a ticket and I can maybe get a better understanding of your setup there and then I can show you how to set up your Arthur account from there. Just so I can understand it properly before I recommend anything. So yeah, just come into our ticketing system, raise a ticket. You can ask for me, and then I can go through setting up your account with you. Um, okay, so I think that's all the questions. Thank you for your time. I will end the webinar now, and you will get a feedback survey. We would really appreciate if you add in your feedback in there, and you would also have the chance of adding in any topics, either financials or functionality you would like us to cover in webinars in the future. We'll have a look at it and then we can plan our future webinars. Thank you for your time.